But we had a massive CPI number. What do you think's going to happen in the auction? Come on. You've got to be in it. You've got to be dealing. The drop was worth $3,000 a contract. It wasn't just a small fall. It was an enormous fall. And when you're an oil trader or a bond trader or an equity trader, you've got to be trying to get these big obvious trades because they don't happen that very often. You're always fighting against almost good value, almost good trades, almost good levels. You're fighting against, sorry guys, you're fighting against things. You're fighting all the time against other things that are happening in the background. You're getting into a good trade and then the value goes against you. You're getting into a good trade and the value goes with you. You're getting into a good trade, but the order flow is not there. And yet when you get the big trades, and I ask the question, who got it? In tumbleweeds, literally. I didn't know where they came from. Tumbleweeds blew across my desk. When I asked who was in the bond short trade, I was like, wow, that is unbelievable. One of the easiest trades you will ever see in bonds. Nobody was in it. I just scratched my head and moved on to oil. And, we've got to try and be in the easy trades because cable was obviously another example of what an easy trade looks like. And I asked who was in the cable trade. And again, the same tumbleweeds blew back across my desk. God knows where they came from this time, but they blew back across my desk. And I was like, what? Seriously? Nobody was in cable. Nobody was wanting this opportunity last night into the overnight session. Nobody was wanting this morning opportunity. The easy trades were crystal clear because when you think about it, what is cable? Cable is a yield-based buy opportunity. And when we saw the yields, obviously, the UK gilt market's closed here. So when we saw the US yields doing this, 6 o'clock, the trade that I was in myself, that's going to drive the dollar. The dollar drives the pound, but the pound is now massively underpriced, and the gilt hasn't priced in the UK yield pop that is going to happen this morning. It's not a question. It's not up for debate. It's not a possibility. UK yields will surge this morning. And if you know that, which you do, you'd say, well, if UK yields are going to surge this morning, what am I going to be able to make my money on? Scratch his head, waits for tumbleweeds. None appear because everybody's buying. Everybody's buying. The long sterling opportunity. Why? Because everybody knows UK yields are going to go surging up this morning. And what happened to UK yields this morning, guys? UK yields opened up and then went surging north. As if that was a surprise to anybody. Well, apparently it was a surprise to everybody because nobody bloody well did the trade except me. The easy trade. The simple opportunity on bonds last night at the auction and then on cable this morning on the overnight session off the lows. These are simple free money opportunities to make fortunes. And nobody seems to be in them. I don't get it. And yet here's a dozen people will all pile into a half chance on the equities. A dozen people will all pile into half chance on oil. I'll pile into the half chances as well, but nobody's piling into the obvious opportunities, the 100%ers, the maximum bet type trades, like sterling in the overnight session for a buy, like sterling at the open for a buy. These are all 100%ers. These are all maximum all-in tens. Everybody seems to like to trade the threes and the fours. They don't seem to like to trade the tens for some peculiar reason. I don't get it. I just don't understand. Perhaps it's just a lack of dedication. Perhaps that's the reason. Perhaps it's just the fact that you can't be bothered trading at 6 o'clock at night on bonds. Well, if you're a professional bond trader, guys, there's only two big occasions where you will absolutely guarantee that you're going to be trading at night. And that is the 10-year bond auction and the 30-year bond auction. And on the occasion when we've got a Fed meeting, Fed minutes coming out at 7 o'clock at night, we will trade at 7 o'clock at night as well. If you want to be a professional bond trader, you will make the time to be on the desk on those occasions. Because every professional bond trader on the planet is on their desks in those occasions. If you want to join them, because you're a professional bond trader, you will join them. It's the same as oil. Oil traders once a week trade on a Tuesday night for the private inventory number. I took it last night, and I'm not even a professional oil trader. I was there. I was taking it because I can always make money on those releases, and I made some money last night as well. There's not that many occasions where you purposely make sure you are at your desk for certain events. Oil bond auctions are one of those occasions. And I'm just gobsmacked that people weren't taking advantage of a $3,000 giveaway. $3,000 a contract, guys, giveaway for just turning up, literally. Kim was talking about that participation award that you get for just turning up. Then that's what happens to the bond traders last night. It was a participation award. All you had to see was the enormous volume, the value you had. The absolutes were getting trashed. The oil price was on a rip. And you were still at the top edge of bonds, ready to sell into any high prior to the auction. And sure enough, within an hour, we were up $3,000 per contract off the top edge of the ultra bonds. Free money for anybody that wanted to turn up. And even a small retail size position of 5 contracts, guys, 15 grand in 1 hour. 15 grand in 1 hour. Nobody's taking it. Nobody's got the dedication to come in at that time and take the deal. It was never going to go up. We'd just seen a huge CPI print from a few hours beforehand. Huge CPI print from just a few hours beforehand, and the price of bonds was higher than that print. How can it go up? It's impossible. Add to that the inflation break-evens dropping, add to that the absolutes dropping, and you simply look at the bond and say, they're ripping the piss. If I don't sell the bond here, I need to give myself a real shake. And sure enough, we sold bonds, we sold bonds, we sold bonds. I got out of Classroom Sharp. I joined the bond selling ahead of the auction, and bada-bum, bada-bing. 1 hour later, we were sitting on $3,000 per contract, more than we had an hour earlier. Unbelievable, is my response. Absolutely perfect. Beautiful trades, beautiful outcomes. Where the hell were yous? Where were yous? Why were you not there? Why were you not doing that bit of business, guys? It's a question you've got to ask yourself, and this is one of the things that we were talking about this morning, was this ability to know yourself as a trader. Kim uses that expression often. Know thyself. Perhaps bonds aren't for you. Perhaps oil's not the right market for you. Perhaps gold isn't the right market for you. Perhaps short-term trading isn't the right way to trade. Perhaps long-term trading isn't the right way to trade. A lot of people go into the markets wanting to trade one particular market and one particular style and find that it just doesn't suit them. It doesn't suit them. Well, you've got to be honest with yourself and try and understand what it is that does suit you. What is it that suits you as a trader? What kind of sentiment have you got? Do you like high volatility? Well, if you like high volatility, you would obviously be more inclined to be a gambler type trader that doesn't get put off by possibly big stops and big targets. If you're a momentum trader, then you want volatility markets, but your style is going to have to be changed. You're going to have the necessary toolkit to get into the right style trade. You're going to have to be a momentum trader to try and take advantage of volatility, but you don't like big stops. There is only one trade opportunity that makes sense to you as a trader. Momentum trading. Trading off of the rejection of a safe trade level, going in behind a trapped buyer or seller, leaning against the delta, and then taking advantage of the volatility, like gold and oil, taking advantage of the volatilities. If you love volatilities, the 5-year Treasury note's not the right market for you, nor is the 10-year. Perhaps you might get away with some business on the ZB, but you're probably bored. Perhaps the market for you, therefore, is the ultra bond. If you like volatilities, then perhaps the S&P isn't the market for you. Perhaps it's going to be better for you to trade the Nasdaq or these kind of markets. There's always a reason. There's always a thing that you can do to put you in the right market at the right time. We talked about it from a sports perspective. A coach goes into a football team and doesn't do a very good job, and yet they were an amazing coach at a previous football team. That's why they got the job. And everybody says the guy's a crap coach. No, he's not. The fit's just wrong. The fit is just wrong. Perhaps there is a football player goes into a football team and doesn't do a very good job. And they say this guy's rubbish. No, he's not. It's just the fit isn't right for that football player in that football team. Fit has to be important. Fit is very important. You've got to choose the market that fits your personality, fits your time frame, fits your sensitivities to volatility, fits the way you like to trade. If you don't find that fit, you'll forever be fighting against the market rather than being with the market. If you don't like your coach, you're forever fighting against the coach. You're not focused on the game. If you think the coach is a bit of an idiot, you're never going to play well. Your fit in that team doesn't work. It doesn't work. And that's why when you hear about players or coaches losing the changing room, this is what they're talking about. The fit's no longer there. It doesn't mean the coach is bad, and it doesn't mean the players are bad. It just means the fit's bad. It might only be one or two players that don't fit into the system. And that's why coaches go after certain players that fit their system. Still doesn't mean it's going to be a fit because of the personalities, but it's got to fit the system. Your trading has to fit. Your personality has to fit the trade, has to fit the market, has to fit the process that you're doing. If it doesn't make you a bad trader. It just makes it a bad fit. Fix the fit. Get rid of the coach. Get rid of the player. Change the system to make it a better fit, guys. Try thinking about the markets in that sense. Anyway, we had some, I wanted to show you, excuse me. I wanted to show you the max trades this morning because they're bloody good. Take a look at these guys. We showed the guys the max trades this morning, and we're really focused on these three because these are unbelievable. Look at these three max trades. Look, guys. 7 o'clock this morning, Frankfurt's open, London session open, and then 8:40. A buy trade, and then a sell trade. Remember, the trade starts when max stops. Trade starts when max stops. So there's the buy trade there, there's the buy trade there, there's the sell trade. Take a look at what happened to these three trades and tell me how good these three trades turned out to be. Here's the buy trade. Here's buy trade number one. Look at that buy trade number one there, guys. Look at that for a buy trade. Here's buy trade number two. Look at that for a buy trade. And here's sell trade number one. Look at that for a sell trade. Thousands of dollars on a two-lot. Thousands of dollars on a two-lot. Unbelievable, isn't it? Unbelievable. That's how good Max is. That's how good Max is. Look, we bottom ticked it. We bottom ticked it. And we top ticked it. You can't do any better than that, guys. You cannot do any better than bottom ticking it, and then top ticking it. It's unbelievable. So Max has had a stormer, absolute stormer today. And that's, you've got to enjoy that, guys. You've got to enjoy that. If you don't enjoy that, I don't know what you're going to enjoy, because that was absolutely rip-roaring success today on Max. So welcome in, guys. I hope you're all good. Let's rattle through. Now let's rattle through the numbers we had this morning, because we did have inflation numbers this morning. They were mixed in some ways. The UK CPI numbers came out stronger than expected, quite considerably stronger than expected. However, the PPI numbers disappointed in both counts, the input and the output. RPI also beat expectations. So on balance, some pretty strong inflation numbers. moving into the U.S. session, of course, we've got numbers coming out at 1:30. The US PPI numbers forecast a little bit softer. Well, the PPI numbers in London were softer, so it makes sense for the US PPI to be softer as well here. Then we've got the Canadian rate decision at 3 o'clock. And then at 3:30, we've got the US oil inventories. 3:30 today for the US oil inventories. 4 o'clock, Bank of Canada presser comes out, and we'll start to see what the Bank of Canada does. No expectation from the Bank of Canada, by the way. There's no rate change expected, and that's a very, very, very high probability of no change. We'll be watching for any opportunities. Anyway, welcome in, guys. I hope you're all good this morning.